D-Street momentum fizzles out with the Nifty back below the 24,400 mark. Broader indices see a slight underperformance, lagging in the negative territory. Most sectoral indices swing between gains and losses, with banks lending major support. HDFC Bank delivered a steady Q4 with management highlighting stable asset quality, strong deposit traction and improving operating efficiency. Brokerages remain constructive, citing resilient margins, strong capital buffers and healthy medium-term visibility. ICICI Bank also saw a strong Q4 with management sounding confident on stable margins, benign credit costs and healthy growth. Brokerages remain upbeat with several seeing ICICI as a top pick among large private sector banks. Strong action in EPC names with EMS Limited rallying after emerging lowest bidder for 2 sewer infrastructure projects in Varanasi. Meanwhile, Sterling and Wilson Renewables surged after large order wins, taking FY26 inflows past the 10,000 crore mark. CERC has issued draft market coupling regulations proposing a major change in power market structure. The framework aims to introduce coupling in day-ahead and real-time markets. IEX is under pressure on the back of the news. Hello and welcome. You're watching Closing Trades here on ET Now. I'm Harsh Saita. Now, very quickly, the Nifty itself is doing pretty okay. A tenth of a percent higher, but very range-bound day of trade for the Nifty. In fact, let me quickly pull up there you go. That's the intraday chart for you. We clocked a low of 24,254, a high of 24,478. But for a predominant part of the day, we've traded in a decently narrow band and in the green. So a couple of positives coming through. When you're looking at the advanced decline on the Nifty, it's even Steven. 25 stocks advancing to 25 declines. Trent is the top performer, 3.5% higher. JSW Steel, SBI, Asian Paints, NTPC, Adani Enterprises are just some of the top gainers. In terms of losers, Jio Finance, on the back of the numbers that it posted, is lower. Hindalco down 2.2% as well. L&T down 1.5%. Kotak Bank, Tata Motors PV are just some of the other losers for you. The mid-cap and small-cap index is lagging, as I did mention. The mid-cap index is absolutely flat, slight negative bias to that one. The Nifty small-cap is down 0.3% thereabouts. When we are seeing the Nifty 500 basket, and first I will talk about the advanced decline on that basket of stocks. You've got 200 advances to 300 declines. So the advanced decline sitting at 2:3. When you're looking at some of the big losers, IEX, GMDC, Cohance, Inventurus, and Tata Tele are just some of the big losers within that Nifty 500 basket. Triveni Turbines up 15%, Aether, Jyoti CNC, Graphite, Z Entertainment are just some of the big gainers in trade on a day like this. So that's broad brush the way things are playing out. Very quickly on to sectors. There was a point in time at the start of the day in the first few minutes where all sectors were trading in the red. Now, except for IT, Realty and defense and maybe metals to some extent and pharma with some mild losses, you're seeing all other sectors trading in the green. So 5 sectors trading in the red. You've got FMCG just about clinging on to green. The Fin Nifty, the Nifty Bank also sitting in the green. The Nifty Auto Index is sitting in the green. The PSU Banking Index, which has been one of the top performers through today, is up 0.9%. And the Nifty Energy Index is the top performer of the day, 1.1% higher on the Nifty Energy Index. Oil and gas to about 0.5% higher. So it's fairly even, Stephen, even in terms of sectorals and the split or the divergence that we're seeing on sectoral indices. Let me take it across though. Karan standing by with some of the stocks that are buzzing at this hour and why they're buzzing. Karan, what's on your list?
Starting off with Aequs, the company has made a further investment in Aequs Force Consumer Products Private Limited that manufactures consumer products and toys for the group. The investment amount is 10 crores. Moreover, the company's stock volume is 7 times the 20-day average. IEX is under immense pressure on the back of CERC issuing draft market coupling regulations. Under the draft, while the power exchanges will continue to collect bids, they will not determine the prices post-coupling. Remember, as of Feb this year, the appellate tribunal had dismissed the petition filed by IEX, and this development threatens the company's near monopoly. Followed by MCX, wherein the company has received the SEBI approval to incorporate a new coal exchange. Sterling and Wilson Renewable Energy is also in focus, as the company has bagged domestic orders worth 3,500 crores. On that note, the total EPC order inflows in FY26 exceed 10,000 crores. An interesting point to be noted here is that the company had initially guided on 11,000 crore worth of FY26 order inflows. And on that note, it seems that the company has missed this guidance. The company's order book stands north of 13,000 crores with a book-to-bill of 1.6 times. Followed by Bharat Heavy Electricals, wherein the company has released its annual financial update with FY26 provisional turnover standing at 32,000 crores. Moreover, on that note, it can be implied that the Q4 FY26 revenue would somewhere be around 10,800 crores, and that indicates a 13-quarter high level. And finally, we have Siemens Energy. Brokerage house Motilal has reiterated buy rating with a target price of 3,700, and that is a 17% upside potential on the current market price. The brokerage maintains a positive stance on the capex cycle and expects a strong earnings growth over the next 3 financial years.
Thank you so much for that, Karan. Let me bring on board Kunal Bothra as well. And obviously, Kunal, 24,400 is what we're playing with at this point. What do you make of the move today?
Yeah, we were discussing this in the month that I'm expecting flattish move for the index. We should just swing around this 100 points band for the Nifty, around 24,400 to 500 kind of a range. I think we've sort of meandered around this range for the last maybe 2-3 years for the indices. There was a point where the Bank Nifty started to show that slight bit of outperformance. We managed to test 57,000 on the spot for the Bank Nifty, but that was very, very momentary. And you see the index scaling over from those levels. So this tells you that somewhere at the higher levels, we are now facing the first part of resistance emerging for the indices, or some selling pressure. We call it profit booking also, which could probably happen to those individual stocks. That could probably be an overhang for the markets in the near term. I was looking at the global market, so the Asian markets have closed on a positive note, but the European markets have started on a bit softer note. So that could probably be acting as an overhang for our markets. Net for the remainder of the trading session today, I would expect more or less a flattish kind of a close, just hanging around to this 24,400-ish kind of a zone.
Okay. What about some of the movers, especially energy stocks, Kunal? Any preference in terms of sectors?
Well, I think in terms of sectors, today the PSU banking stocks have started to show signs of recovery.
Yes.
But from the energy pack, if you ask me, I think there's nothing as such which is looking very attractive. So, what happens is on days, few odd days, you might see few odd stocks starting to show signs of recovery. But then largely, you're not seeing this as a pattern emerging for these names. And that's why it's going to be very, very difficult to call out a trend for many of these stocks as well as the sectors. So we need to see more consistency or stronger follow through. That I believe is lacking for many of the other sectors.
So the strategy, the tilt, Kunal, should be wait and watch as to which way we go, or this is just a consolidation and therefore an opportunity, and what stocks?
So the best way to summarize is, Harsh, that it's a good time to start taking out some profits. If you've been trading since the last 3 weeks or invested in the last 3 weeks, it's a good time to start taking profits on the stocks which have moved up and given you maybe double-digit kind of returns, and start looking at some other options, some other trades, some other sectors. I think that's the better strategy over here, because when the markets, or if the markets are hitting that consolidation button, it's going to be very, very strong probability that you will see a sector churn which will start to happen. So you don't want to be stuck into the stocks which have performed very well and they go into a correction, and the other set of stocks or fresh sectors, they start to come back into a recovery. In that anticipation, I'll suggest a couple of buy calls. And of course, both of them are fresh ones. In fact, one buy and one sell is what I would recommend. The first one is one APL Apollo. The stock, after quite some time, has come back towards a breakout above its 50-day moving average, crossed the levels of 2,000, 2,050 today. So we'd look at a target of 2,250, stop loss at 2,080. And after quite some time, initiating a first sell call, sell on PNB Housing for the stock indicators seem to be coming into an overbought territory on the hourly charts. So just a couple of days of time frame is what I'm expecting at max. 888 as a target on the downside, stop us at 924.
Okay, those are some quick ideas for you coming from Kunal Bothra. Let me slip into a very short break. On the other side, we'll have with us a fundamental guest here to speak to us. We'll have Daljit Kohli, independent market expert, to give us a perspective of what he's doing in this market. Stay with us. Okay, Kunal still with us, and let's try and dissect this a little bit more because Kunal is sounding cautious at this point. Kunal, some of the stocks that you were bullish on, and especially on the Nifty, and you sounded bullish on an SBI, some of the PSU banks, for example. Now PNB Housing, I know not at all a PSU bank, but you're actually bearish. So would you therefore take money off the table with regard to PSU banks in particular, or would you hold on to those?
The PSU banking lot, the trade still is open, and because I think today is the first day out of many days that you're seeing SBI leading the charge right from the start and from the front, because you've seen post SBI moving up higher is where there is a slight higher dose of confidence into the other PSU banking names. I think in the midst of the trading session, I saw Bank of Baroda, Bank of India, Canara Bank, etc., coming back to their intraday highs. So that tells you that SBI has just started to warm up, and I think that trade would still be continuing. But it's just that on individual stocks, we are finding themes where there are signs that the indicators are slightly on the overbought territory on the hourly charts, trying to test whether those hourly indicators which are on the overbought territory, whether they're working or not. Because if in case they start to show signs that these stocks start to show signs of reversal, then eventually we will realize that many of the stocks within those categories, those sectors, etc., they would also start to exhibit a very similar kind of a pattern.
Okay. And what about something like an Eternal, Kunal? We've seen a decent rally on that stock now. What next for that one?
Yeah, bullish on Eternal. In fact, today is one of those very rare days where the stock has shown a MACD breakout on the daily charts. It's a very strong indicator breakout because this probably signals a start or an onset of a fresh trend for Eternal. And apparently in the last, I think, 3 weeks, when the markets start to show signs of recovery, the stock started a bit late. It started to show signs of initial recovery, remained sideways, for I think 3, 4, 5 days, and then start to pick up slow and gradual pace. So right now is where I'm expecting that the momentum was starting to come back into the stock price. My targets for Eternal, which I flagged off maybe I think 3 weeks back also when the stock was at 210 to 15 levels, remains at 275 plus kind of a mark. So expecting that potentially in the next 2-3 weeks approximately, you might expect the stock to hit towards the 275 plus levels.
And what within the power ecosystem, Kunal? For example, the Adani group of stocks was one that you were bullish on. What about the likes of a Power Grid, etc.? Anything within that basket which you're liking? Those two baskets, if at all, I can split that up.
Yeah, so I think there are two stocks within the. So if I can probably add even the PSU theme over here, then NTPC and Power Grid are the two names which are looking phenomenal. So we discussed Adani Power, I think, a week or back. When the stock was at 175, 180 plus kind of a range. That stock has done exceptionally well. It's now moved above the 200, 205 levels, the last I had seen. But apparently even the PSU names like NTPC and Power Grid, I think these stocks are showing signs of a very strong breakout. It's very rare, Harsh, to see these kind of PSU names, power stocks showing signs of such kind of a strong price up move day after day and maybe week after week. That generally happens when there is a strong expected trend for many of these names. That's why I would believe that traders who are holding on to the long positions over here for the power stocks, specifically for NTPC and Power Grid, they should continue to do that.
So you hold on to an Eternal, you hold on to NTPC Power Grid, you hold on to some of those Adani names that you were recommending last week. So none of that construct changes really, Kunal, right? Is that the right way to think of it?
Yeah, that's the right way to think of it.
Okay, I'll stick with power and I'll take Kunal's view on IEX just after I'm back. But shifting focus to the power space, CERC has issued draft regulations over market coupling. Prakash here with all of the details.
Well, an important development for the power sector, the CERC has come out with the draft market coupling regulations for the implementation of market coupling across power exchanges, a very significant development coming in. In fact, comments have been invited from the stakeholders. That essentially means formal process has been initiated for the implementation of market coupling going forward. In fact, the regulator has proposed to make certain amendments to the existing power market regulations to introduce market coupling. In fact, the draft has proposed to allow implementation of coupling in day-ahead market and a real-time market. It is also noted that the procedure will be published within 6 months from the notification, which essentially means that the draft has specifically mentioned a fixed timeline for the implementation of market coupling once final notification is issued. A very significant development. In fact, power exchanges will act as bid aggregator, wherein Grid Controller of India will act as a market coupling operator. Comments can be submitted by May 16 this year. That essentially means that the CERC has formally initiated the process to implement market coupling by finalizing regulations. You are aware of the fact that CERC had issued a direction for implementation of market coupling in July last year, which was challenged by IEX in appellate tribunal. After hearing both sides, tribunal has passed an order that the issue cannot be appealed at this point of time, as the final regulation has not been issued and there is no change in existing regulation. That also means that once the final regulation is issued by CERC, that could be challenged going forward.
Okay, got it. And so that, thank you firstly for that, Prakash. Let me come to you on some of these names, Kunal. We spoke with the Techno Electric, for example, and IEX today is down 7.5% odd. Now IEX, on the back of that news which Prakash just gave us, Techno Electric for completely different reasons, but we had that conversation with them. What's the take with regard to both of these on charts, Kunal?
So Techno Electric, I think, is a decent chart. The stock today, I think, is crossed above its 200 DMA. That makes the near-term patterns a lot more stable for the stock, even though it's a high beta name. So I think that's one stock which I would believe could probably see a little bit of more consistency on the upside going forward. IEX is a very critical stock because every time the stock has seen a kind of a stability building up or a trend building up, you have one news or the other which comes out in this aspect, and it just dampens the stock price trend from a near to medium term perspective. Even last time, for example, Jan 2026, when we started off, IEX was almost at 155, 160 levels, and the stock on a single day fell by, I think, more than 10%. But what happened post that was that the effect lasted for another 1.5 odd month, and the stock kept on falling from those 140, 43 levels to 120 or sub 120 mark. That's the problem with these deep sell-off days for IEX, that it doesn't end there. It sees a follow-through for itself spread over the next weeks.
So for those wanting to enter IEX, wait. But Techno Electric is a decent chart, right?
Yes.
That's broadly the take. Okay. Let me bring on board Daljit Kohli, independent market expert, joining us at this hour. Daljit, give us a sense. How are you viewing markets at this point? What are you advising investors do at this point?
Good afternoon. Thanks for having me on your show. So what we are constructive at this point on the markets. What we believe that probably worst of this war pandemic and war issues are behind. Now, of course, how fast it will recover, how soon we'll end the war, I don't know. I think nobody knows on that. But one thing is very clear from the market movement as well as from the news flow, that probably the worst scenario which could have played has already been understood by both the parties. And now they're all sitting on the table, discuss about future course. Now, normally these things don't solve in 1 or 2 meetings. They do take a long time. There are ego assets, there are various issues which need to be sorted out. So for that uncertainty period, we will have to bear that. What we are believing is that probably it is the right time to start using your money, putting to use, maybe 15-20% here. And then on these bad days, negative news days, you can gain opportunities. you can start adding some small tranches there. So slowly and steadily you can build. Now, see, as of now, we are only analyzing the impact of near-term impact of what has happened or because of war. Now, actual impact will come over next 2-3 quarters when we'll come to know how each specific company is getting impacted. Some by because of the input, some because of the demand destruction, some because of the delays in procurements of raw material, etc. So all those things we will come to know only in Q2 numbers, Q3 numbers. And that time, again, there will be sector-specific, stock-specific reactions. But I think the panic reaction is now over.
Okay. So what is it that you should nibble on to, Daljit, at this point? Give us a sense of sector tilt, stock tilt, if you have any.
Right. So one thing is one sector which is very clear beneficiary of this entire episode is power. So within power, you have a very long value chain. You can play it through renewables, you can play it through generation, transmission, equipment players, financiers. So you have to find specific companies within that each sub-segment. And there are companies which are available at reasonable valuation, I would say. This theme is going to play for a very long time. I think everybody is now clear that we need to create dependency, in-house dependency on all these energy security. So, and now nuclear power is also added into this. So there are equipment, spare parts producers who are going to supply these. And these are the themes. This is the one which will play for very long period. It is not going to happen or not going to be just 1 or 2 quarter theme or 1 year theme. So power is one segment that we are playing. Second, of course, is the AI related theme, which is semiconductors and data centers and the various accessories which are being supplied to these. So there can be a cable manufacturer who gets the advantage. There is an EPC player who is a beneficiary of these themes. So you may not get a direct play like in foreign markets. You have some direct plays on these themes. We may not have those direct plays, but there are indirect ways of playing these themes. So these are few things. Then again, metals is one where again there is a lot of disturbance happening on the supply side. So that could be a shorter term duration.
Right. Okay. That's the take coming in right now in the markets. Just want to take a glance at what's happening within the broader end of the market. While the Nifty, of course, has been quiet, look at the Adani group of names. Adani Green holding up a good 3.6%. Other than that, BHEL has been making a very decent move all through last week, another 3.5% today also on that stock. Torrent Power is holding up a good 3.5% in trade. And then CG Power as well, which is making a good move, about a 3.6% off an uptake. The breadth of the market has significantly recovered actually from where it started off, at least within the F&O pool. We're now running neck and neck. While IEX, of course, the losses there are far from over, still staring lower by almost about 8%. Geo Financials is still down. Sona Comstar is down about 2.7%. PI Industries and Nalco are some of the other stocks which are feeling the heat. Kunal, two stocks, BHEL and the kind of strength that it's showcased in the last couple of trading sessions, and Torrent Power, which has also jumped up today 3.5%.
BHEL is a classical case because the stock has come out of a huge correction. There was a point where I think the stock fell from 330 levels to almost 230, 250 kind of a range mid of or end of 2025. But from there, the stock has almost shown like a classic V-shaped recovery. This breakout for BHEL takes the stock back again towards its previous multi-year highs. There is a major breakout, a rounding bottom formation which has been broken for BHEL. My assumption is that the stock looks extremely attractive from a long-term positioning from current levels also. So I would be very bullish on BHEL, not just from a trading perspective, but even from a medium to long-term perspective. For Torrent Power, I think it's more like the power theme which has been going on over the last many weeks. I think that's where you're seeing the stock showing signs of excellent strength for itself. Difficult to give a buy call here because it looks like that at 1600, 1620 mark, there are indicators which are slightly on an overbought territory. I would probably expect some sort of a cool off over here. if it comes back to say even 1575 kind of a price point, which could be just 3 percentage points lower from the current juncture, that could be a good zone to go for a buy.
Okay, that's the take coming in on both BHEL as well as Torrent Power. On that note, let's take a very quick break. We're holding around the 24,400 level on the index futures. Let's see what transpires in the next 1 hour. Back to closing trades right here on ET now, holding out quite flat right now. Range day, so to speak. 24,400 is where we're currently at for the Nifty futures. It's good to see that the market breadth has managed to hold out. At least it's not as bad as we started off the day with. A lot more stocks are getting added to the list of gainers. It continues to be a tug of war really, with SBI on one hand and then L&T as well as Kotak and the likes on the other, and of course underperformance from HDFC Bank as well, even though it's recovered most of its morning losses. But Meryl is here to highlight some of the other newsmakers this afternoon.
Yes, here's a few stocks that we've seen buzzing in trade so far. Starting first with Mastek, the company is in focus after reporting quite a soft set of Q4 numbers. Their fourth quarter profits have slipped down almost 2% sequentially. And the company has also cut its EBITDA margin guidance from 17 to 16.5%, citing rising competition. And this is why the stock has seen quite a beating in today's trade. Next up, Jio Financial Services is in focus. The company has reported a 14% decline in profit, even though net interest incomes rose about 29% on a year-on-year basis. Now, this is indicating that growth has remained intact, but profitability saw pressure in the stock. Also importantly, the group CFO, Abhishek Haridas Pathak, will be stepping down effective today, which could keep the stock on the radar even going forward. Moving on to Bharat Wire Ropes, the Lloyd group of companies has picked up a 5% stake in the company, which is a positive signal as it signals institutional interest. Finally, Asian Paints is in focus as well. The company has announced a second price hike in the range of 3 to 5%, which is effective starting May 5th. The street will watch closely on how this translates into how this trickles down into the company's books. So yes, here's a few stocks that were on our list based on their movements today.
Okay, thank you so much for that, Meryl. Some stocks on our radar. Let me quickly take it across to Daljit. Daljit, within the power ecosystem, I know you did mention the ancillaries as one of those plays. What about the lenders? Do you like that pack? Is that also one of those that you would play?
So in fact, these lenders have disappointed in terms of stock performance for quite some time. PFC and REC, these are the two. Now that there is some activity going on about merger of these two. So again, what final shape it takes, how much is the valuation, etc., that we will see over the period of time. But I think both of them are available at very reasonable valuations. Especially in the fact that they don't have to, technically there is no NPA for these guys. No? It is basically they're all covered by state government guarantee and central government things. But the problem was that in the last 1 year, market was building in a lot of growth coming in, which they did not in their asset book. They did not show that kind of growth. And that is why they were trading at a subdued valuation. I think now with this theme picking up, with the more announcements coming for new projects and a lot more activity on this merger, combining the two companies, basically they are doing the same thing, then why keep two companies? So that all these things will help over the period of time. And I think ultimately this segment should also perform. So within the BFSI space, I think this is one sub-segment where still there is a valuation.
Okay, that's the take coming in on some of the power financiers. Look at what's happening within the Alcobev space, and an interesting note coming in from Nuvama stating that the Karnataka liquor policy turns out to be quite a positive for the entire sector. They expect prices of spirits for listed companies to cool off because of the lower taxation, which they think is going to only drive volume growth further. And of course, they do expect the UK FTA as well to kick in perhaps by about the second quarter. Take a look at how Radico Khaitan has been in the last 10 days. A UBL, a USL and Allied Blenders, all of these names have done quite well. Kunal, you've been liking Radico for a while. What next after the recent correction and even the rebound?
Yeah, it's almost like a 20% jump for Radico, because I think the stock was 2600 just about the last month, previous month, and now it's jumped up to 3200, 300 plus levels. And that's a very steep kind of a move for a stock like Radico, because the stock, over the last many years was a very slow, gradual trending stock on the upside. So for the stock to gain its mojo back again, I think it's a very comfortable as well as a positive sign that the long-term trends are coming back for the stock, and there could be a possibility that the stock would just about keep on moving up higher, show signs of strength even in the near to medium term. So bullish on Radico in that aspect. UBL, that's a stock which I think is just starting to show signs of recovery from its previous major swing lows. It has a lot of hard work to do in terms of breaking out of the resistances, because the stock at current levels of 15, 20, 25 at the current market price is still trading almost 200 points lower than its immediate 200-day moving average. So in terms of breakout, the stock has to do quite a lot. As of now, the momentum as well as the trend or the leadership, if I can say that, is with Radico. So stay with that stock.
Okay. Curious to know, Kunal, what's the take with regard to Realty? Because that was the other pick of yours. I remember you suggesting that Realty has underperformed for 3 straight months, and thereafter now we've seen a huge unwind with regard to the Realty index. Excuse me. What next for that one?
Yeah, in fact, there was a point where real estate index or Realty index for the Nifty, I think, went to a double-digit correction in the last, I think, 4 or 5 months on a trot. And that's rarely happened for a sector, that for 5 consecutive or 4 consecutive months, you see a sector going into a downtrend and being amongst the worst performers on a relative basis. So that called in for a recovery. It's good to see a 20% plus kind of a recovery for the entire Nifty Realty index. I think we were almost at 630 on the Nifty Realty, and we are now almost at 790 plus for the Nifty Realty index. So that tells you that it's been a very good recovery for the index. Right now, what's also happened is within the pack, now, it's DLF which apparently has underperformed. You have Godrej Properties, Oberoi Realty, today Quality Partners showing signs of very good price uptake. There was a move, I think, in Prestige a couple of weeks back when the stock had shown double-digit kind of gains. So the other real estate stocks, not the likes of DLF, they have performed very well. And there could be a point where DLF would start to play a catch-up for itself with respect to the peers. So if someone is looking at a buy at the current juncture, I would probably give DLF slight more expected beta, because over the near term, the stock has underperformed its other real estate major peers, and there could be a play where the stock can catch up to at least maybe 625 to 630 mark.
Just taking a look at what's happening within the large cap pool, while of course Trent is your biggest mover today in terms of the index weightage and bearing on the index, SBI is the one which is holding out very smartly. Eternal as well, looking good by about another 1.5%. It's managed to cross the 250 level. Bajaj Auto is looking smart. Some of the Adani group of names, Adani Ports, Adani Enterprises, all looking strong. M&M is higher by about 1%. Bajaj Finance holding up 1% as we speak right now. But what about the sporadic moves coming in on HDFC Life, which of course fell flat after its numbers came out? Let's check in on that space as well. Daljit, what is your opinion on whether insurance is a worthy investment?
So insurance remains an underpenetrated area for a very long time. And of course, the runway is very, very long. So there is no doubt about that. But unfortunately, the companies have not performed up to the expectation. There are always this demand is there, everyone knows, but it's not showing up in the numbers. No, somehow, and there is a lot of regulatory changes continuously happening. One or the other news flow keeps coming in, sometimes from the IRDA, sometimes from the commission-related things, and now this Bima Sudhan and all that. So I guess the sector will remain subdued for quite some time, although there is a lot of potential there. Valuation-wise also, they're trading at a comfortable valuation. Some of the life insurance companies, we like them. One of them, which has a very good backing of the bank as well as a good agency setup. It was taken over by a bank very recently. So that company, I think, has been doing very well on the agency side. We think that there is a growth potential and valuation comfort also there. So we have one of the companies in our portfolio, but again, this will be a very slow and steady mover. We don't expect fireworks.
Okay, interesting. Daljit, great to be having you on the show. Thanks for joining in today. Let's address what else is happening in the market, and Sajid is here with the FNO snapshot. Sajid?
That's right. Now the market is holding above the 24,400 mark, and there is a short covering which is happening, and that could be seen from the open interest, unwind that we have seen nearly down by nearly 0.65%. It's also, in the last half an hour or so, the discount has also, widened a bit to nearly 18. So some shorts now coming into the market as we speak, and the index is up nearly 0.2%. Again, Nifty Bank has also given up on most of the gains since morning. It's down. It's up only just 0.2%, and the open interest is down as we speak, nearly 1.17. So some of the shorts which have got covered, and now some fresh, shorts are getting built in some of the stocks. If you look at HDFC Bank, there's a short build-up happening there. Kotak is having a short build-up, and Axis is having a short build-up. PSU banks are in the positive territory today with some long buying happening in SBI, BOB, Bank of India. There, though there's some unwind of long positions happening at PNB there. Look at what's happening in the put and call writers in today's market. 24,400 it continues to be the good support, with a lot of put writing happening at 24,400 and some build up of put action happening in 24,500 there. But if you look at the distribution chart, you'll see that 24,500 continues to be see some resistance, and there's a good build-up of open interest happening at the far end, which is a 25,000 level there, but the support coming from 24,000. So there is a chance of Nifty drifting below 24,400 in the next 30-40 minutes when the last hour of trade happens there. But futures gainers include BHL, where we have seen a long build-up happening. Torrent is seeing some long positions getting added, and Tube Investments is also seeing some position getting added. The stocks up over 3% in today's trade. Futures losers include IEX on the back of the draft coupling policy, which has come out down 7%. Geofinance consolidated numbers have disappointed, 2.7% down, and PI industry is also seeing some correction today of 2.7% with some short build-up happening in today's trade. Open interest gainers include IEX, short build-up there, 21% jump in open interest for that. Aurobindo Pharma is also seeing some shorts getting built with 20% jump in open interest, and Yes Bank is again after the earnings seeing some short build-up with 10% jump in open interest there. In most active stock options, you have in losers you have Angel One, long unwinding. Hudco is seeing a short covering, and Piramal Pharma is seeing some long unwind today. In the most active short options, you have HDFC 800 April call. The stock features around 797. The April 800 call is now becoming a good resistance for HDFC, with premium down nearly 7.2 to 11.6 rupees, and open interest up nearly 20.88 lakh contracts in today's. The other big active one is ICICI Bank 1350 April put, where the premium is down nearly 9 rupees to 17.15, and open interest build up of nearly 4.4 lakh contracts there. The stock hovering above the 1350 mark. So it's 24,400 as of now. Let's see how the market is going to take. We're seeing some fresh shorts getting added in the Nifty futures as we speak.
Okay, let's welcome on board Richard Jain as well from Motilal Oswal and ask him what he's making of the market. Richard, fairly range-bound when it comes to the index. First, your index strategy, and then, of course, on the Nifty Bank as well, because there too it's that tug of war with SBI and ICICI Bank, along with HDFC Bank on the other hand.
Yeah, hi, very good afternoon. Well, in last couple of weeks, we have already seen a good up move from the recent low of around 22,200, almost a rally of around 2,200, 2,300 points, and the index is now hovering towards near that 50-day EMA resistance mark. But the kind of interest that the broader markets have shown in this leg of up move clearly indicates that we might see just a pause or a minor pullback moves from this 50 DMA. but the overall trend still remains quite strong. And whenever we see such momentum, it should at least retrace up to 61.8% of the entire previous downtrend, which comes around 24,750. So I think that the downside from here on should be limited. 24,300, 250 should be a good support range to get into in case if we get any dip towards that level. So for index traders, I think it's still a buy on dip market. If we get any kind of minor dips, use those declines as buying opportunity, and 24,750 is the level that we expect positionally for Nifty to get in. Now, even Bank Nifty no, relatively has seen a pullback move along with the broader markets. It's hovering near the 200 DMA resistance. But the kind of strength that certain private sector banks have shown, stocks such as Axis Bank, which has really done well, even from the PSU space, SBI has seems to again resuming its broader momentum. So I think certain heavyweights would continue to lift the banking index to higher. 58,000 is where the immediate hurdle for Bank Nifty index is paid. But again, as I said, just because the run up that has already been seen in both the indices, Nifty as well as Bank Nifty from the recent lows, some cool off or minor pullback cannot be ruled out. So I think buy on dip approach should be a better way to trade the index.
And Ruchit, specific names or your picks in a market like this, therefore?
One is the sugar space, but we think that is in a sweet spot with terms to risk reward ratio. Balrampur Chini is one stock that we like at current levels. The stock has already seen a good price wise as well as time wise correction. Recently, the stock has witnessed a price up move supported by rising volumes. Now, today, if we see that from after that consolidation around its 50-day EMA, the stock has given a breakout from its falling trendline resistance. So, even today's volume, if we see compared to daily average volume, they are quite good. So from a trading perspective, short-term traders can go long in Balrampur Chini, which stop loss below 495, expecting target somewhere around 544 going ahead. And power is another space which has really done well. A clear, fresh buying interest has been seen most of the power-related theme. We like power grid within the space where a consistent up move can be expected. Price up move in the month of February with good volume supported by consolidation and again a breakout indicating continuation of its broader uptrend. So I think here also the downside would be limited. Power grid can be bought at current levels with stop loss below 300 for potential up move towards 355 going ahead.
Okay, interesting. Okay, Ruchit, hold on to that thought. We'll take a very quick break and come right back with you.
Welcome back, and let me take you through an exclusive conversation which ET Now had with the DFS Secretary, Mr. M. Nagaraju, and he raised serious concerns over rising commissions in the insurance sector. He outlined the sustainability of this depends on insurance companies striking a balance between onboarding new clients and premium increases. Listen in to what he had to say.
The RBI in his recent stability report also mentioned this. It's a matter of concern for all of us in the government. The unchecked commissions is not good for the sector. And you can't have the commissions rising higher than the premiums. And that actually shows the commission-led growth model, which may not be sustainable in the long term. Now, the insurance companies have to strike a right balance between the new clients onboarding through the agent model and premium increase. Unless they strike a right balance, these three, payments to agents, premium collections, rise in the premium collections, and payments to the bank and to the hospitals, this will not be, they can't have everything.
Okay, that's the DFS Secretary speaking exclusively with us at ET Now. Let's also welcome on board Deepak Shenoy and ask him what he's been doing in this market. Deepak, hi. Afternoon. Good to be speaking with you. Utilize the March decline or running with the FOMO feeling? Because there are only two emotions right now in the market.
That's true, Aisha. In fact, deployment, of course, keeps happening. So we are cognizant of the changes that are happening in the market. So, especially when markets go up and the news isn't necessarily positive, that's when I think there's a lot of more interest that happens, at least in equity markets. But one part of it is the results are also coming in. So we're getting to see a lot more in terms of commentary of various sectors. So deployment is happening over a phase period, and I think we'll take more of our views as time goes by. There is going to be some possibly more volatility coming in the near future, but I think by now, valuation assessments are in much better shape. Once the yearly numbers come in and we're able to see the commentary, I think it's more clear whether this is a temporary decline or there's a structural problem. So far, there don't seem to be any meaningful structural problems, but all the results haven't yet come. So let's see what that has to show in store. So yeah, deployment is on. So we had a lot of cash last month in the mutual fund, so there is more that's happening right now.
How much of that have you deployed, Deepak? How much of it you're actually keeping in store for maybe a larger correction, if at all that were to happen?
It's ongoing. So there is a phased approach to moving back in. On a flexi cap fund, you actually have the ability to go to 100% deployment or go down to 65 at low time. So we were at about the 65 levels in March, but we're higher now. The exact numbers will change on a daily basis, but deployment is on towards where we want to we want to have reasonable presence in the equity markets. However, times will change, so these strategies will change according to when the data changes. But I think the point over here is not to try to time the bottom, but let the market start to tell you when the bottom, or rather when there is some kind of a recovery. I don't think we're there yet in terms of a full recovery, but at least early signs are we're starting to get there. So yeah, I mean, it makes sense to deploy more.
So when you talk about deployment, Deepak, is a larger allocation to small caps? Because at an index level, that's where you've seen the biggest recovery play out from the March lows, as opposed to even the Nifty.
Yes, I mean, the problem is, of course, small cap definitions have changed, right? So now even a 30,000 crore market cap company is a small cap, which it wasn't maybe 5 or 6 years ago. So to that extent, some companies which we would have imagined were mid caps are actually classified as small caps now. So there is some deployment, across the spectrum where there are opportunities. But we've seen opportunities even in the large caps. We've seen opportunities even in the small caps. So there is definitely something to be said across the board. A lot of recoveries tend to pick up even stocks which don't have a lot of stuff backing them. So while they may bring up a small cap index in the temporary time frame, we might not see that sustain once their results come or once their commentary comes through. So you have to be careful of what you deploy in and whether there is some meaningful data backing them. So it doesn't make sense to say only go to small caps or only go to mid caps. I think you have to take an opportunity-based assessment. And to be fair, I think the opportunities are in all three. To also be fair, large caps fell the most in Feb and March. So therefore, their recovery is also reasonably strong. Small caps fell a lot before that. So, their recovery is more like relatively low volume based recovery on smaller market caps. So, there will be a difference in this month alone. But if you think longer term, I think you'll have to say that where the opportunities exist may not necessarily be defined by their market cap. So we're happy to deploy in all of the market caps. As a flexi cap fund, I think we can. So we have the ability to do all three.
So Deepak, then what's the sectoral tilt? You have to give us something to work with.
Yeah, I mean, right now, for instance, the results that have come in so far, the financials are kind of divided. The larger ones aren't doing so well in terms of growth or commentary. Early stages, the credit growth numbers are good, but the profit numbers aren't very good. And there is some leeway that has been given by the RBI in terms of provisions going forward. So there will be some kind of weakness over there. IT again, commentary hasn't been very kind to them either. But some of the industrials, defense, manufacturing, showing early signs. All the results haven't come yet. Most of the results haven't come yet. So we can't really say over there. But at least those are showing some signs. At least my assessment, at least at the early stages, that in the long term, we will find takers for defense stories, regardless of how the current geopolitical environment turns out. Because no matter what happens, we've got to be self-sufficient in defense. We've got to eventually be self-sufficient in oil and gas as well. So some of those, whether it's shipping or oil and gas, I think there will be a lot more work towards pushing those sectors. So those are definitely interesting longer term stories, which will be, once many of them announce results, we'll have more clarity on what the plans and order books are. But longer term, I think those still remain good stories. The rest, I mean, it's still early days, I think, in terms of results. So we're seeing stock price recoveries way up before the results. So sometimes it makes you feel like you've missed the bus. But sometimes it's prudent if you're thinking 5 years down the line, just wait for results, see what's happening, and then you'll have the data to make those decisions.
Deepak, you still seem a little circumspect about what the earnings would throw up. I know we have very few of the large caps out just yet to work with, but where do you think the negative surprises, if at all, could come in, or even the positive ones for that matter?
So a lot of them, I think, defense might show up something very interesting because it's the last quarter of the year, so they'll get some more clarity on what's coming. There is also potentially some negative surprises that are going to come from some parts of the manufacturing sector, especially maybe some of the auto names as well, where gas availability had at some point created some issues. But as long as that's temporary, that's fine. But there will be some impact downstream in the near term. But I think overall, we are not seeing any major loss of consumer demand. We're not seeing, I mean, I don't think FMCG is going to do that badly or that well for that matter. I don't have no great expectations either way. But I feel some of the manufacturing sectors, you might see that the results may be a little bit subdued. And typically what happens is if it's expected that a result is going to be subdued, a lot of the kitchen sink items go in there. So stuff that, you would have normally taken a loss over 4 quarters, you might just want to dump it into 1 quarter. So it cleans up the books for the next 3 or 4 quarters. So I expect more of that to happen, especially where there have been disruptions in supply. There have been issues in terms of input costs. But it remains to be seen whether these are taken to be kitchen sink quarters and therefore results are subdued, which opens up the game for better results in the future. Or is it really a structural problem that certain companies will face? I expect some of those negative surprises to be kind of become visible once their results come in. But where there is a structural decline, that is where I think we'll have to be careful of either paring down or taking away positions. I expect anything that is now north of 15% in profit growth to be a big positive surprise for this quarter. So we are seeing some, there's no doubt about it, but still early days. So again, the results will tell us the rest.
Okay, defense, that one's been in focus. In fact, we spoke with the management of Apollo Micro. They've said that they currently sit on an order book of around 1,100 crore. And that order book will go up by 4 to 5 times in the next financial year. Of course, the license with regard to manufacturing of ammunition just kind of helps that number. But 4 to 5x is no mean feat. Listening to what the management had to tell us.
We are expecting it in this financial year. I think by end of this financial year, our order book should grow by 4 to 5 times. And by receiving this license, we will be going a little more aggressive in business development for our overseas, market as well. And we are expecting, we have already submitted few, RFQs, for certain programs.
Still Pretty quiet for the index, haven't moved on anywhere. In fact, just lurking around the 24,400 thereabouts mark. Trend still holding out. JSW Steel looking very smart, almost a 3% notch up there. SBI, of course, is your big mover today, 2.25% higher. Asian Paints, after some of those price hikes that most paint majors undertook, 2% higher for that stock as well. Bajaj Auto, Adani Ports, Adani Enterprises, Eternal, Coal India. These are some of your winners in trade. On the flip side, the pressure on Jio Financials, L&T, on a Kotak, Hindalco, Tata Motors PV, that continues. And even HDFC Bank, it's drifted lower than about 0.5%, at least on the futures as we speak right now. Within the broader markets, of course, there's an SBI card, Sona Comstar, PI Industries. These are your rank underperformers. And the pressure hasn't gotten off from IEX, which is still down by about almost 8% or so. Richard, what's your reading on the charts of IEX after the breakdown that one has seen in the stock today?
The overall trend still remains negative, and today's move is just a continuation of the downtrend. We have consistently seen a relative underperformance from this stock over the last few months. There were a bit of pullback moves along with the markets from the lows of 115, 117, but again, that were not supported by any kind of high volumes. So when the up moves are not supported by volumes, any kind of such bad news could really lead to sharp downwards, what we have seen today. So clearly, the trend still remains on the negative side. So one should avoid any kind of bottom fishing here as well.
Among others, there'll be HCL Tech, which will come out with Q4 numbers. Deal ramp up may support growth. Actually, Darshita here to tell us exactly what the street is expecting. Darshita.
Let's look at HCL Tech Q4 FY26, which may look soft on the surface. But here are the few important nuances that the investors should not miss. To start off with, the revenue in the dollar terms is expected to see a decline of about 3% sequentially. Now, this is largely due to the seasonal weakness in the product business. However, in the rupee terms, the growth is expected to remain stable, coming in at around rupees 34,000 crores, indicating underlying resilience. On the margin side, EBIT is expected to come in the band of around 17.5 to 17.7%, which is approximately 90 basis points down sequentially. Now, this is mainly because of the wage hikes and the restructuring cost. But encouragingly, on the profitability side, PAT is expected to see a growth of about 14% QOQ, supported by the rupee depreciation. For this quarter, the street is already factoring a slight dip, with the constant currency to see a decline of about 1.7% sequentially, largely due to the seasonal drag in the product segment. Moving to the deal momentum, the outlook remains encouraging, with the TCV expected to come in at around $2.5 billion, which supports the medium-term visibility. Finally, looking at the guidance and the key expectations, the street is expecting the revenue growth to come in at around 3 to 5% for FY27, and the margins to move slightly to the aspirational band of about 17.5 to 18.5%. To sum this up, Q4 may appear subdued, but the real focus will be on the management commentary, AI-led growth, and the margin trajectory. And that's where the street and the markets are focusing on.
Okay, thank you so much for that, Darshita, and many congratulations on that debut of yours on ET Now. Great having you here as part of the team tracking IT. Let me bring in Deepak Shenoy as well. And Deepak, thanks for staying with us. Talk to us about IT, because you've seen numbers come in from TCS, you've seen numbers come in from Wipro. It's been a mixed bag, frankly. TCS, did you feel that the management was much more confident than what you anticipated, or is that not the right reading in the way you took the commentary?
Yeah, to be fair, I can't, comment on the individual stocks, but by and large, in one of the cases, there was an extremely high order dependence on one effectively related party. Therefore, I don't want to take those into consideration in terms of growth. So therefore, there is a problem with growth. I also believe that, fundamentally, look at what's happened in the international space. Anyone making plans would have paused those plans to figure out how much this, Iran, Israel, US thing will last and what will it impact. And therefore, most expansion plans in that sense would be put on hold. What I expected them to achieve, and I think that's happening in both of these results, is that a lot more of this AI level outsourcing will probably happen to India with the enterprise players, because now with proper prompts, an engineer in India can be far more productive than he used to be. There was a productivity difference of maybe 3x, which is probably down to 1.5x now. So it is therefore, you get a lot more productivity from a team in India than an equivalent team in the US for the in terms of cost and in terms of time. So American enterprise players may be more willing to have more offshore development done with the help of AI, and therefore a lot of teams will kind of get augmented in India. Not as much as maybe they would have done earlier, but I definitely see an increase in business. We've seen early signs of this. This is a good sign. But in terms of new orders, I think even customers of theirs will be cagey in terms of doing anything large in terms of expansionary goals until they were sure of where this lands. So expect end of this month or maybe early next month, if there is an actual, continued ceasefire and so on, for more plans to firm up. So their next quarter results will be more impressive in terms of actual order growth. Right now, the AI books look quite interesting. So there is possibly some opportunity, but a lot of this will also depend on their ability to do inorganic growth if they want to, or if they decide not to do that, then what they are doing in terms of organic growth. That will kind of drive it. Don't expect anything more than 10% for any of the players this time. Would be a little difficult for them also. So, you got to give it more time. I think you should expect a bad quarter from everybody.
All right, so stay cautious, but stay aware with regard to IT. I'll quickly flag off those numbers flashing at the bottom of your screens. That is Bank of Maharashtra, very solid growth. When you're looking at the net interest income number, it's up 19%, near 19% on a YOY basis. You've got good growth coming even on the advances and deposits front. You've got a decent 17% odd growth, or 22%, I beg your pardon, odd growth on the advances front. 14 odd percent on deposits. The credit to deposit ratio rising to 83% as a result of that. You're seeing operating profit grow by around 16% odd, and profit after tax on the back of benign provisioning has come in at 7,000 crores. So a very strong growth on the net profitability. You're seeing net interest margins at 3.91% on a YOY basis for the full year FY26. So that's the full year FY26 number. Quarter ended, you've got a 35% growth at 2,000 crore. That's where your profit after tax sits at. 17% growth on operating profit, near 3,000 crore on the operating profit front. You've got around 600 odd crore of provisioning which has happened. Very quickly again, Deepak, if I can take your view with regard to some of these PSU banks, they continue to clock really, really healthy numbers, right? In fact, I was just looking at the PCR for a Bank of Maharashtra. It's at 98 point change percent. That is very, very well provided. Near 2% ROA in Q4 is what they've done. And they sit on two odd times price to book. Would PSUs still be the go-to? Select PSUs, of course, over private sector banks?
I mean, in terms of valuations, they're definitely more attractive. They're taking away market share back. They lost a lot of market share, as PSUs as a category did. And now we've got a lot more. They are the biggest players in gold loans, and gold loans are expanding at a very, very rapid pace. Gold loans by themselves, and I'm talking about all PSUs, not just one bank or the other. PSU banks in general have taken the total gold loan outlay to even more than all the credit cards outstanding in the country, which is quite remarkable because they were 1/10 that about 2.5 years ago. And that has kind of propelled one part of the growth. Second is they've managed to maintain asset quality quite reasonably, not gone overboard in terms of corporate lending, and a corporate recovery will almost definitely involve the PSU bank. So there is going to be, I think, multiple stages here of recovery, but given their stronger balance sheets, they seem to be better poised. The issue in the past has always been governance issues when it comes to the government saying, oh, merge this bank with that, or give this bank's bad assets to that, and so on. That no longer, hopefully, is no longer a concern in the future. So they're definitely attractive players, and you can see their prices have increased to a point where some of them have come close to private sector valuations as well. So to that point, I think you'll be selective in the banking sector, but valuations for the PSU pack in general look more healthy than some of the private players, and especially maybe the smaller public sector banks as well, and smaller private sector banks as well, by the way. They are also quite attractive in terms of growth to price valuation. So in that sense, there is opportunity in this space, I think, now. This particular quarter will, I mean, results, that is the Jan to March quarter results, I think will tell us who's on stronger footing, and, high provisions, lower NPAs, high growth, and high operating leverage does point to something interesting here.
Kunal, do you also believe that it's the smaller PSBs which are on a better footing, or would it continue to be SBI for you?
I think it'll be SBI for me. I think for the sector to revive, you need a strong leader to try and show the direction in terms of strength. And I think SBI is one of the classic stocks in that segment. We've seen this behavior earlier also. I think mid of 2025, where you saw the PSU banking stocks moving up higher. It was a point where SBI first started to move up higher about the 820-25 levels, much prior to the other PSU banking names, the mid cap or the tier 2 large cap names. They managed to catch up later. So I think I'll still go with SBI at the current juncture, and add to the fact that the beta for the stock is relatively low than the other mid cap or the tier 2 large cap names on the PSU banking names. That's also should play as an advantage to SBI over the near term.
Okay. All right. Let me actually switch focus and talk a little bit about consumption. FMCG major Nestle India is all set to report the numbers for Q4 FY26. Revenue and profit likely to expand, but some contraction likely on the margin count. Snehi here to give us a lowdown on what to expect.
Well, yes, the first Nifty FMCG company to come out with its earnings is Nestle, and this time around, yet again, we're expecting a very good set from Nestle. Remember, Nestle is a company from the FMCG space that has consistently been doing well in terms of their earnings. So for Q4 too, we expect the trajectory for the company to continue. On a standalone year-on-year basis, we're expecting the revenue to come in around 6,200 crore rupees, an uptick of 12.5%. EBITDA is also expected to grow by 8%. For net profit, we're expecting to see a growth of 4.5% at 926 crore rupees. Margins, however, we're expecting a sharp margin contraction this time around of 110 bips at 24.1% compared to 25.2% this time last year. Now, this is attributed to higher growth in staff and other expenses, and this is expected to weigh on margins. Other than that, if you take a look at some of the key expectations that we are building in for Nestle's earnings, volume growth is seen between 9 and 11%, which is very strong for the company. Domestic sales are expected to grow between 11 and 12%, and exports revenue is likely to expand between 15 and 18%, which is again very strong given everything that's happening geopolitically. The higher growth in staff and expenses, like I said, will weigh on margins, but double-digit growth is seen in all segments, barring milk, which has traditionally been a weak segment for Nestle for the past few quarters, and also nutrition this time. We're not expecting to see double-digit growth over here. There is minimal exposure to Middle East for the company, and this could aid their earnings, and they are expected to take a price hike in Q1 due to the palm oil inflation that we've seen recently. So all of these are going to be some of the expectations that we're going to be watching out for, but other than this, what you should be keeping a very close eye on is going to be the outlook on raw material prices and consequent pricing actions, their commentary around that, commentary on volume growth and demand trends, distribution expansion if they're going to do something about that, demand outlook on rural versus urban demand. They've recently added new lines of productions for Maggi at their Sanand plant, and last quarter also, a couple of quarters ago, they had added one for Munch. So how are those products performing? What is the demand is also going to be on our radar, and any brownfield or greenfield further expansion the company plans to undertake. So we'll be watching out for all of this. But yes, to sum it up, we're expecting to see a very good show from Nestle for Q4.
Okay, thank you so much for that, Snehi. Before I come to you on consumption, Deepak, I'm curious to know what the take with regard to market coupling and this entire IEX saga is. What's your take on it?
Sorry, to be honest, my feeling is that market coupling concepts should apply to equity markets as well. There is no reason why you should be, if there is a better order in the BSE, that the NSE, a person who places the order in the NSE should not be able to get it. So there is, the one market price concept that is available or rather the market-wide order book or single market order book that is available in the US, where when you place orders, it actually enforces that brokers find the best bids from all the exchanges that have supplied liquidity and therefore execute on all orders at the same time, on all exchanges at the same time. We should have that in equity as well. In this case, I think the market coupling kind of goes in that direction where it says multiple exchanges can therefore participate. This, there is, I think energy demand in India is going to grow at a tremendous pace. So the problem isn't that loss of market share will be X that will result in so much, right? But it's about the overall growth of the market. You can't have one or two players monopolize something as important as an energy market where institutions play. So eventually, you're going to find that multiple players come in and kind of take demand and kind of spread them around. But the overall market could grow substantially from here. And that's where I think the score or scale, the growth will be. Valuations should correct to that extent in terms of some players who have, you kind of modeled it based on, oh, they're going to continue to have this market share. I think overall that is a wrong position to take in something as sensitive as energy. It's much easier to take that position in equity markets, which are not so crucial, but energy markets are far more crucial. So you can't have single player dependence dominate this space. So you should assume lower market share. And market coupling is one of the ways that the government will kind of get in. There'll be more. So it's not just now, you will expect more measures to reduce market share. The idea should be how big this market is going to be in 10 years. And therefore, even at a lower market share, do you have enough growth to support the valuation and therefore have opportunities? Won't comment on the individual stocks here, but I think energy itself provides a great opportunity, but it may not necessarily only be in the some of the larger exchanges. It may be in other players as well.
Oh yeah, the entire supply chain metrics, and that has enough and many opportunities there as well. Today, of course, there are names like a JSW Steel, Uno Minda. They're holding out quite well in trade. Ultratech Cement, of course, it becomes the largest cement player in the world. That stock as well has been in focus, hasn't done a whole lot though today. But other than that, L&T has turned out to be a disappointment. Kotak has been down 1.5%. Hindalco continues to be under pressure, down 2.5% as we speak right now. Reliance has also been a little iffy ahead of its numbers later this week. Less than 0.5% lower, but lower regardless. Hasn't participated in today's move. Flat for TCS, Bharti as well, marginally soft. And Ultratech Cement has been pretty soft, or rather flat in trade. Interglobe Aviation, though, it started off gap down, I recall, and then from there, it's definitely garnered a whole lot of strength. It's recovered its losses and now beginning to flatten out and inch up as well. Did make a few attempts intraday too. Richard, what's the reading on the charts for Interglobe now at 46.54?
So clear pullback move has been seen in last few trading sessions, and the 200 DMA hurdle for the stock is now around 5200 kind of level. So I think the stock has still potential to rally higher towards the 200 DMA. So it's not 5200, it's around 5000 kind of level. So the stock still has potential to rally towards that 5000 kind of levels. If any existing positions are there, then they should continue to hold on. I suppose the recent divergence, it seems that the price-wise corrective phase for the stock is at least over now.
And talk to us about FMCG, Ruchit. How are you placing your bets there? I mean, we had a very, very good kind of move seen on Friday. That's been it's been a bit soft today, but what's the larger direction in your opinion?
So largely, I think still we would see some consolidation going ahead. We are just seeing one or two trading sessions of up move in some of the FMCG names, but the follow-up move needs to be seen. They have been consistent underperformers compared to the broader markets up move, what we have seen in last couple of weeks or last 2 to 3 weeks. So very selective stocks within the same, I think could do well. Kolpal is one stock where volumes have picked up good. So this is one stock which one can expect some relative outperformance, but not very bullish on the sector as a whole. I think still some consolidation or time-wise correction is left in FMCG space.
Okay. Deepak, your take on FMCG?
The problem here is valuations. I think, you pay 50 to 80 times for something that's growing at 10% and, maybe some price increases. But by and large, I don't expect a large amount of growth here to support these valuations, which are primarily because of, illiquidity premiums. The promoters or MNC promoters in some cases have a significant market share. There's very little free float hanging out there, which is actually traded in the market. So therefore, there is some kind of a valuation premium. But we've seen in the past that when those promoters sell their stakes, we will find that stock prices generally either stagnate or correct downwards to meet a more reasonable multiple. At 10% to 12% broad scale FMCG growth in some of the larger players, they're not attractive at all. Something that's smaller, growing at 30, 35% may be more interesting because they may be either creating a category or taking market share in a category where otherwise the incumbent was not really meaningfully spending on marketing. We've seen this in the paint sector where new players have come in and definitely taken market share. We've seen this in some of the other consumer categories as well. So my thing is, the FMCG sector as overall will probably grow reasonably, but I think more new players will come in and take market share, and existing players will be left at maybe single digit, high single digit to very low double digit growth going forward. So not very keen on long term holdings over here.
Okay.
Richard, very quickly, do you have a take with regard to Reliance Industries in particular?
I think those who are looking for a bit medium term to long term, they should buy at current levels. The stock is trading around its weekly 200 EMA, which in the past as well in the corrective phases and have acted as a good long term support for the stock. So I think from a risk reward ratio perspective, definitely it's a buy at current levels, but not that high beta name where you should expect any short term returns, but rather if you can hold for next 2 to 3 quarters at least point of view, then these are good levels to get into Reliance Industries.
Deepak, you understand oil and gas really well. I've got exactly a minute. What's your take? How do you play this market at this point from an oil and gas perspective?
Oil exploration, big time positive. I think India needs to get out of this stranglehold of having to buy oil from everywhere, at least in the short and medium term. The rest of the oil refining players, medium sort of, they're cyclical players that will go up and down. I would say focus on the oil exploration players. They're going to get a lot more interest from the government going forward.
Interesting. Okay, Deepak, always good having you on the show. We'll let you go on that note. Richard, great to be speaking with you as well. Let's begin winding up for the day then. And it's definitely been one of those range-bound, quiet kind of Mondays that we've had at our hand. Although, having said that, we're definitely closing in at the lower end of the range as opposed to where we were intraday. Definitely 66 points lower for the Nifty futures, just about surfaced around that 24,300 level. The key pressure points today, like we've been marking out, Geofinance, Hindalco, Tata Motors PV, L&T and BEL, along with, of course, HDFC Bank, which also slipped in the dying minutes of trade back to 1% lower, and Kotak Bank, which have really weighed heavy on the indexes today. On the flip side, Trend 3% higher nearly, JSW Steel, SBI up 2%, Asian Paints up nearly 2%, SBI Life, Shriram Finance and Eternal were some of the gainers. And the broader market's relatively a lot more resilient as opposed to what the Nifty did. But there as well, one was pretty sideways itself. 143 is the final count to the declines on closing bell. IEX sinks further lower, 8.25% down. SBI Cards, PI Industries and Sona Comstar have been the rank underperformers. Other than that, Power India, Uno Minda, TI Industries, Torrent Power have seen some shades of green.
At stock-specific action, let me quickly take you through some of the big movers of the day. IEX down 8%, 8.5% on, again, fears of coupling making an impact on their business. EMS, on the back of that order win, was up 6.5% odd. Interarch was up 3.5%. Again, order win. Trent was the big mover of the day, 3% higher on a Trent as well. Bonus plus rights is what is going to be considered in the next board meeting. BHEL continues its journey upwards, 2.5% higher, and the kind of traction you're expecting to see on top line in Q4 is decently strong. Dredging Corp is the other one which has won another order. Apollo and Zentech, Apollo Micro and Zentech, spoke to ET Now, spoke to your channel, and spoke very confidently with regard to the kind of numbers they're expecting to clock for FY27. Siemens Energy initiating coverage note, CG Power, Hitachi, Atlanta Electricals, which is some of the big buzzers on the back of brokerages. Sagility, despite an initiating coverage note, is down 2% at close. That's broadly the take with regard to how some of the stock-specific action has been. Mid and small caps largely have underperformed the index, so you've seen some pressure in that bucket. Within the Nifty 500, you saw a decent amount of pressure, around 150 odd advances to 330 odd declines. GMDC, Cohance, Inventuris, Cartrade, which is some of the big casualties of the day. Triveni Turbines, on the other hand, up 10%, the top gainer on the Nifty 500, along with a Z, a Balrampur, a Radico, and a Schneider, led the gains within the Nifty 500 basket. Kunal, sum up the day for us from your perspective. How do you see the day like? What is your key takeaway from a day like today?
Yeah, I think today is the day in the last couple of days where you're seeing resistance for the index coming back, because this is a second attempt for the index to try and claw back about 24,400 to 500 range. We tried to make an attempt towards 24,500 mark. I think we made a high of 24,480 on the spot Nifty, but we failed to cross over, and there was a good amount of evidence in terms of fresh shorting which had happened for the from the option perspective, at least at higher levels. Same is the case with Bank Nifty. Fourth consecutive day where the Bank Nifty attempted to close about that 56,850, 57,000 mark, but met with resistance and a good amount of selling. So we are at a point where it looks like that selling pressure is starting to originate back again. That could probably put the index trends under check over the very near term.
Okay, that's the take coming in on the markets and how this Monday has panned out. But Kunal, we'll see you again with all the market action tomorrow morning and wind up right here on this edition of Closing Trade.